So, welcome to all of you, Shiksha 360. And let's start our session, that is chapter number 26, part 1. That is compliance function in the banks. As you know that, or as you already aware that, presently the compliance is to be most important in the banking sector. Clear? Whatever you have to be done, all the work you have to done basically with as per the compliance. Clear? As per the compliance. Otherwise, even if at doing the work, if you're not following the compliance, so later on basically you have to fulfill that. Clear? Later on you have to fulfill that. Clear? Like in the technology, in the face of the digitalization, clear, it is very important to follow all the guidelines. Clear? To follow all the guidelines, and we have to work according to that. So now let's start our discussion on the basis of that. That is regarding what? That is compliance function in the banks. So let's discuss some basic things regarding that. So compliance, it is an wait a minute. So what is in compliance? So compliance, it is an independent functions. Clear? So what is compliance? Basically, compliance, it is an independent function that identifies, clear, basically that identifies, assesses, monitor, and reports on the compliance risk to the bank's board. Clear? So what they will do? Clear? First of all, they have to identify. Clear? First of all, they have to identify. Later on, second step, that is they have to assess. Clear? So compliance, it is an independent function basically that identifies, assess. It's clear. First of all, they have to identify. Second one, that is assess. Third one, that is the monitor. Fourth one, that is the reports. Clear? That identifies, assesses, monitors, and reports on the compliance risk to the bank's board. So compliance risk, further basically what it says, that compliance risk basically involves a risk. Clear? What the compliance risk basically will do? Compliance risk basically involves the risk of legal or regulatory sanctions. Clear? Compliance risk basically what it involves? Compliance risk basically involves the risk of, so compliance risk basically involves the risk of legal or regulatory sanctions. Clear? Either it is to be legal or regulatory sanctions, material financial loss, or loss of reputation. A bank may suffer. Clear? A loss of reputation. Basically, all these things a bank may suffer as a result of its failure. Clear? A bank may suffer. Basically, why? A bank may suffer as a loss of its failure to comply with the laws. Clear? A bank may suffer all these things basically as a result of its failure to comply with the laws. Clear? To comply with the laws, rules, and regulations. Clear? To comply with the laws, rules, and regulations related self-regulatory organization standards. Clear? Rules and regulations related self-regulatory organization standards and code of conduct applicable to its banking activities. Clear? And code of conduct applicable to its banking activities. Further, that is the compliance function. Clear? So please remember that what it involves, the compliance function basically involves the risk of legal or regulatory sanctions, material financial loss, or loss of reputation. Clear? So that's why basically it is sometimes saying that it is also leads to the reputational risk. Clear? Compliance risk basically leads to the reputational risk also. So the compliance risk, further, that is the compliance function has to ensure, clear, the compliance function basically has to ensure strict observation of all the statutory provisions. Clear? The compliance function basically has to ensure that the strict observance of all the statutory provisions. Clear? Strict observance of all the statutory provisions contained in the various legislations. Clear? Such as the Banking Regulation Act. Clear? So they have to follow which types of the guidelines or what guidelines. First one, that is as per the Banking Regulation Act. Second one, that is the Reserve Bank of India Act. Third one, that is the Foreign Exchange Management Act. Fourth one, that is the Prevention of Money Laundering Act. Fifth, as well as. Clear? So they have to follow the guidelines. First one, that is the Banking Regulation Act. Second one, that is the Reserve Bank of India Act. Third one, that is the Foreign Exchange Management Act. Fourth one, that is the Prevention of Money Laundering Act, etc. Clear? As well as to ensure the observance of other regulatory guidelines. Clear? Other regulatory guidelines which is to be issued by, clear, issued from time to time, standards and codes prescribed by the BCSBI. Second one, that is the IBA. FEDI, FIMDI, etc. Clear? So one question from my side to all of you. Please comment first. What is the full form of BCSBI? IBA? I think all of you are aware regarding the IBA because it is the organization basically which is dealing with the banking organization for the settlement. FEDI and FIMDA. Clear? So standard and codes prescribed by these four organizations: BCSBI, IBA, FEDI, FIMDA, etc. Clear? And each bank internal policies, clear, and each bank internal policies and the fair practices code. Compliance laws, rules, and standards. Clear? Compliance laws, rules, and standards generally cover the matters. Clear? Compliance laws, rules, and standards. Basically, what it cover? Generally cover the matters pertaining to the observance of laid down the rules and standards of market conduct, managing conflict of interest, treating customer fairly, and ensuring suitability of the customer advice. Clear? And ensuring suitability of the customer advice. So all these comes under the compliance function. Clear? All these things comes under the compliance function. Okay. Now move to the next thing. The banking landscape. Clear? The banking landscape of India is changing rapidly. As earlier, basically, we are doing all the work is to be manual. Now we are moving towards the technology. Okay, so the banking landscape of India is changing rapidly with the evolution of the technology. Clear? Basically, with the evolution of the technology, the entire industry has undergone a massive transformation. Clear? With the evolution of the technology, the entire industry, clear, basically the entire industry has undergone a massive transformation that has changed the way, clear, basically massive transformation, basically that has changed the way financial procedures are carried out. Clear? Basically that has changed the way that the financial procedures are carried out and the way the financial institutions now operate. Clear? Now it is totally changed. Functioning of the banks, it is totally changed now. So the collaboration between the finance and the technology, clear, the collaboration basically between the finance and the technology has led to the radical changes in almost all aspects of the banking operation. Clear? So the collaboration basically between the finance and the technology basically has led to the radical changes in almost all aspects of the banking operations. So financial technology, it is a disruptive intervention. Clear? Financial technology, basically what is that? It is a disruptive intervention which will have far-reaching impact. Clear? Financial technology, basically it is a disruptive intervention which will have far-reaching impact on the working of banks. Clear? Which will have far-reaching impact on the working of banks and financial institutions. Clear? Working of the banks and financial institutions. So digitalization of transaction, it is the way forward. Clear? Digitalization of the transaction, it is the way forward. So this paradigm shift has posed significant challenges. Clear? So this type of the shift basically has posed significant challenges to the banks as well as to the regulators. Clear? Basically significant challenges posed to the banks as well as to the regulators. So one of the most important challenges is compliance, which is critical. Clear? So one of the most important challenges here, that is, it is to be compliance, which is critical for the sustainable growth of the banking and financial system. Clear? So one of the most important challenges here, that is the compliance. Clear? Which is critical. Clear? Basically which is critical for the sustainable growth of the banking and financial system. Clear? For the sustainable growth of the banking and the financial system. Clear? So compliance, it is to be must here. Next one. So what is the meaning of compliance, which we have already discussed in the first slide? So compliance basically, it is defined as the act of observing or following the laws. Clear? What is that? It is the act of observing or following the laws, rules, regulations, and various codes of conduct, including the voluntary ones. Clear? Various codes of conduct, including the voluntary one. So while most of them arise from the external requirements, clear? So while most of them arise from the external requirements, adherence to the organization's own internal rules, policies, and procedures. Clear? While most of them arise from the external requirements, adherence to the organization's own internal rules, policies, and procedures, acting in accordance with the ethical practices is equally important. Clear? Policies and procedure, basically acting in accordance. Clear? Acting in accordance with the ethical practices. Clear? Acting in accordance basically with the ethical practices, it is equally important. So a strong compliance culture. Clear? Here for what it say that a strong compliance culture should ensure, clear, a strong compliance culture should ensure adherence to the fair practices codes, clear. A strong compliance culture basically should ensure adherence to the fair practices codes, manage conflicts of interest, and treat customers fairly, clear. That is, manage conflict of the interest. So what is the meaning of the conflict of interest? Can anyone tell? Conflict of interest, very, very important word here. That is basically if you are doing working for the bank, clear. So you can do work in such a way that basically it not lets to your individually profit. Like we can say that if we are doing a loan, so we will take some commission from that, clear. That is, we can say that conflict of interest, clear. This type of thing will not to be arise here, clear. This type of thing we will not to be arise here, clear. So manages the conflicts of interest and treat customers fairly, clear. And further, that is, we have to treat customers fairly with utmost integrity, honesty, and transparency, clear. Basically with utmost integrity, honesty, and the transparency, clear. To kindly remember these points. Now next one, that is, what is the objective? The objective basically would be to nurture the trust of its customers, clear. Here what is the objective? The objective basically would be to nurture the trust of its customers while delivering efficient customer service, clear. To nurture the trust of its customer basically while delivering efficient customer service. So thus the compliance shall go beyond what is legally binding and embrace the broader standards of integrity, ethical conduct, and good governance, clear. So thus the compliance shall go beyond what is legally binding, clear. What is legally binding, and embrace the broader standards, clear. And embrace the broader standards of the integrity, ethical conduct, and good governance, clear. And embrace the broader standards of the integrity, ethical conduct, and good governance. Further, now next one, that is, what is the compliance risk and what is the significance of the compliance function, clear. So we have to discuss here 2 points. First one, that is, what is the compliance risk. Second one, that is, what is the significance of the compliance function. So compliance risk, clear. First one, that is, compliance risk basically in the banks, clear. Compliance risk basically in the banks arises due to non-adherence, clear. Compliance risk basically in the banks basically arises due to the non-adherence to the set of laws, clear. Compliance risk basically in the banks arises basically due to the non-adherence to a set of laws, rules, regulations, practices, self-regulatory organization standards, code of conduct, etc. Clear. So why the bank compliance risk arises? So compliance risk basically in the banks arises due to the non-adherence, clear. Basically due to the non-adherence to a set of laws, rules, regulations, practices, self-regulatory organization standards, code of conduct, etc. These can be grouped into the internal compliance, clear. These can be grouped into the internal compliance, that is basically applicable to all employees. Regulatory and legal compliance, that is applicable to bank as a whole, clear. So basically these can be grouped, clear. Further, that is, these can be grouped basically into the internal compliance, that is basically internal, that is basically as per the internal rule, which is applicable to all the employees. And further, that is regulatory and legal compliance, clear. Applicable to bank as a whole, clear. Applicable to bank as a whole, clear. So now what is the significance of the compliance function, clear? What is the significance of the compliance function, clear? So this is a totally theoretical topic, so try to understand all these things, clear. Just go through video at least 2 times so that you are able to remember, clear. As otherwise basically it is very difficult to go through a book, clear. If you are going through that, clear, just go through the video at least 2 times, you are able to remember all the things. So that is significance of the compliance function, that is promotes orderly behavior, clear. Promotes orderly behavior and uniformity, clear. Promotes orderly behavior and uniformity in conduct of the stakeholders, clear. In conduct of the stakeholders, especially the employees, clear. So promote orderly behavior and uniformity in the conduct of the stakeholders, especially the employees. Second one, that is reduces the systematic vulnerability, clear. Reduces the systematic vulnerability and resultant chaos in the system, clear. Reduces the systematic vulnerability and resultant chaos in the system. Third one, that is minimizes the deviations and the aberrations, clear. Minimizes the deviations and the aberrations, clear. That is deviation, that is if we are doing any work, clear. So the what the guidelines is there, so we have to try to minimize the deviations from that, clear. To minimize the deviations from that. Fourth one, that is the identification of the violations, clear. Identification of the violations basically for prompt corrective action through the systematic process, clear. Identification of the violations for prompt corrective action, clear. For prompt corrective action through the systematic process. Next one, that is improves the corporate governance in the banks. Clear, improves the corporate governance in the banks. Next one, that is BCBS. What are the BCBS? Basically, the BCBS paper on the compliance and the compliance function in the banks. Clear, April 2005 defines compliance risk. Clear, what it defines? Basically, defines compliance risk as the risk of legal or a regulatory sanction. Clear, basically, what it defines compliance risk as the risk of legal or a regulatory sanction. Clear, basically, what it defines compliance risk basically as the risk of legal or a regulatory sanction, material financial loss, or loss to reputation. Clear. So compliance risk basically as the risk of legal or regulatory sanction, material financial loss, or loss to reputation. A bank may suffer. Clear, a loss to reputation. Basically, a bank may suffer as a result of its failure. Clear, a bank may suffer as a result of its failure to comply with the laws. Clear, basically, if a bank is not following the guidelines, so basically it will, like, sometimes if loss will happen, so we can say that basically due to not following the compliance, the bank will suffer that. Clear, like you have seen that basically RBI continuously doing penalty on the banks for not following the guidelines. Clear, for not following the guidelines. Clear, so here compliance function in banks defines the compliance risk basically as the risk of legal or regulatory sanction, material financial loss, or loss to reputation. A bank may suffer as a result of its failure. Clear, as a result of its failure to comply with the laws, regulations. Clear, to comply with the laws, regulations, rules, related self-regulatory organization standards, and codes of conduct. Clear, further that is, and the codes of conduct applicable to its banking services. Clear, and the code of conduct applicable to its banking services. Clear, so all these are comes under the significance of the compliance function. So further, that is compliance risk arises due to. Clear, so what are the risk? Clear, what are the reasons basically for that compliance risk arises? Clear, so here compliance risk basically arises due to the first one, that is legal or regulatory sanction. Same things they are repeating again and again. Second one, that is material financial loss. Third one, that is the loss of reputation as a result of failure to an organization comply. Clear, third one, that first one, that is the legal or regulatory sanction. Second one, that is the material financial loss. Third one, that is the loss of reputation as a result of failure to an organization. Clear, as a result of failure to an organization comply. Clear, that is they are not following the guidelines and doing the work on general basis. Clear, so that leads to also the compliance risk. Clear, that leads also to the compliance risk. So banks to identify. Clear, so basically banks have to identify to reduce this type of risk. Clear, so banks have to continuously work on that to reduce this type of risk. Clear, so banks to identify, evaluate, and address. Clear, so banks to identify, evaluate, and address the legal and reputational risk. Clear, so banks to identify, evaluate, and address the legal and reputational risks and enhance the control processes. Clear, and they have to enhance the control processes. Further, that is penalties basically imposed by the regulators and supervisors. Clear, further that is the penalties imposed by the penalties basically imposed by the regulators or supervisors for non-compliance. Clear, penalties basically imposed by the regulators or supervisors basically for what? For non-compliance, and the name and shame these penalties bring. Clear, so these have to basically they have to control. So the risk of RBI penalties. Clear, this I have already told that the RBI continuously penalizes the bank. So the risk of RBI penalties basically arise due to the non-compliance of. Clear, the risk of RBI penalties basically arise due to the non-compliance of. Clear, so why? Like you have seen that basically like on HDFC, on SBI, on Kotak Mahindra, on Bank of India. Clear, so just every bank basically will face the penalty if they not follow the guidelines. Clear, so like I will discuss some of the news also in the next session regarding that. Clear, just I'm taking just simple names. Clear, not I can say that or not on other banks. Clear, every bank basically will face like Yes Bank. Clear, like I think all of you are aware regarding the Yes Bank also. Clear, 2019 incident. Clear, so what the risk of RBI penalties basically arise due to the non-compliance. So first one, that is prudential and regulatory compliance. Clear, first one, that is the prudential and regulatory compliance. Second one here, that is the integrity and the market conduct. Third one, that is the legal compliance. Fourth one, that is the internal compliance. Clear, so for all these things, clear, basically for all these things, if they are not following the guidelines, so banks basically RBI will penalize the banks. Clear? So RBI basically will penalize the bank. Now next one here. As per sections, clear, further, that is as per section, clear. So there is some sections, clear, according to which basically RBI will penalize the banks, clear. RBI basically will penalize the banks. So which are that? So as per section 46 subsection 4 and section 51 subsection 1 of the Banking Regulation Act 1949, clear, of what basically of the Banking Regulation Act 1949, RBI can impose penalty, clear, basically RBI can impose the penalty based on the deficiencies in the regulatory compliance, clear. So RBI can impose the penalty basically based on the deficiencies in the regulatory compliance, and it is not intended, clear, further, that is, and it is not intended to pronounce upon the validity of any transaction or agreement, clear, and it is not intended to pronounce upon the validity of any transaction or agreement entered into by the banks with their customers, clear, and it is not intended to pronounce upon the validity of any transaction or agreement entered into by the banks with their customers. Further, that is RBI imposed, and clear, second point, that is here RBI imposed an aggregate penalty, clear, RBI imposed an aggregate penalty of rupees 19.41 crores, clear, RBI imposed an aggregate penalty basically of rupees 19.41 crores on 54 regulated entities, clear. RBI imposed an aggregate penalty of rupees 19.41 crores on 54 regulated entities from July 2020 to March 2021, clear, basically from what time to what time, that is on 54 regular entities basically from July 2020 to March 2021 for non-compliance, clear, basically regarding what, basically for non-compliance with the provisions and on contraventions, clear, basically for non-compliance with the provisions and or contravention of certain directions, clear, and or contravention of certain direction basically issued by the RBI from time to time through various circulars, clear, and or contravention of certain directions, clear, and on contravention of certain direction issued by the RBI, clear, that is issued by the RBI from time to time, clear, issued by the RBI basically from time to time through various circulars, clear, basically through various circulars. So it is time here that the fear of fines, clear, so it is time that the fear of fines and penalties, clear, it is time that the fear of fines and penalties must be replaced, clear, that it is time that the fear of fines and penalties basically must be replaced by a financial management system, clear, that is by a proper financial management system with built-in control, clear, basically with built-in control making compliance on everyday practice that enables an organization, clear, basically with the built-in control making compliance on everyday practice basically that enables an organization, clear, basically that enables an organization to operate at greater efficiency, clear, basically to operate at greater efficiency. Further, sound governance, that is basically if we are following the rules and the regulations properly, clear, that is sound governance creates conducive environment, clear, further, that is sound governance basically creates conducive environment for the values of compliance, integrity, trust and respect for the law to thrive in the organization's culture. So basically, banks must empower their employees to operate with the responsibility while maintaining the flexibility necessary to stay on top of ever-evolving regulation and business challenges. Clear? So at some times, like if you are not able to follow the guidelines, so basically you have to be deviate only up to a desired level. Clear? Not more than that. Clear? That is while maintaining the flexibility necessary, clear, while maintaining the flexibility necessary to stay on top, clear, while maintaining the flexibility necessary basically to stay on top of ever evolving regulation and business challenges, clear, or ever evolving regulation and business challenges. Okay, so in the session we will have to discuss up to this much point, that is first one, what is the compliance risk and the significance of the compliance function, and compliance risk basically arises due to, clear. So this will lead to the 1 mark question. So kindly remember that, clear, that is legal or regulatory sanctions, material financial loss or loss of reputation as a result of failure to organization comply, clear, that is they are not able to follow that. Okay, so now next one, that is what are the RBI penalties, clear, arises due to the compliance of this one also led to the 1 mark question. Clear, kindly remember all these points, that is prudential and regulatory compliance, integrity and market conduct, legal compliance and internal compliance. Okay, so in the next session, we will discuss regarding the regulatory risk. That's why I will not start because it is a continuously topic. Regulatory risk, what are to be covered under that? First of all, we have to cover the operational risk. Second one we have to cover under that, that is the legal risk. Third one basically we have to cover under that, that is the reputational risk. Fourth one, that is annihilation risk. Clear? So for these risks we have to cover under that. After that we have to cover next one, that is the non-financial risk. Under first one, that is a business risk. Second one, that is the strategic risk. Third one, that is the compliance risk basically relating to the cyber security. Clear? Compliance risk basically relating to the cyber security. Clear? So all these risks we have to cover in the next session. Clear? Along with some questions. Clear? In the next session I will include 4 to 5 questions so that we can do practice side by side also of all these questions. Hope it is clear to all of you what we have discussed in now. So thanks to all of you for joining this session.